Welcome back to the Eric Krown crypto channel, wishing you a happy and healthy start to this nice macro Sunday morning over here as we prepare for a very high term time frame look at everyone's favorite asset, or maybe favorite asset. I don't know. Maybe I'm making assumptions right now, but that would be Bitcoin, of course. So I wanted to play my favorite game that I play with myself besides the one that everyone else knows. And that is to convince myself of the opposite, or essentially I'm going to be looking at what I can create as the best case scenario for Bitcoin, having put in a macro bottom here, because all across social media land, I'm sure that you, as well as I, have seen all of these very triumphant calls that Bitcoin has put in the low and it's no stops until 50,000 bucks. And well, that's great, but and maybe that could even come to fruition. So I wanted to challenge myself to put together the best case scenario for the lows being in and, well, a bull market emerging from here. I want to be on the record as saying, however, I do not believe that this is the most likely thing to happen, of which we can go over the new or the information over this new week. And then, of course, we have a couple of major catalysts this week. That is going to be the CPI prints coming out on Wednesday, I believe it is, and then also the Ethereum merge, actually, too, I believe on the same day. So that would be the day where disaster could strike, or maybe a little bit after that day, if it is going to indeed happen. And I want to be very, very deliberately clear here. Despite all the things that we're going to talk about on this video, if there is any sort of a closure on a medium or higher term time frame below 20,500, all of this analysis is fucking worthless and down to the current lows and very likely new lows over the next few weeks as we wrap up September would be incredibly likely. So again, 20,500, very, very important right there. All right, so let's do it. It is time to create the best case scenario for Bitcoin putting in a low right here. So first and foremost, I want to bring us back to the accumulation distribution indicator chart. This is going to be on the monthly time frame specifically. And as you can see, it is to the regions that we have seen major macro lows in the past. So we have been really harping on this chart a lot since Bitcoin, well, really entered into the hefty part of this bear market below about 50,000 bucks. And we have never observed a Bitcoin macro cycle low without the monthly accumulation distribution indicator getting down to this green horizontal line that my cursor is currently on right now. You can backtest this yourself. The only iteration that this is a little bit shaky on would be the first one, but I would argue that Bitcoin just didn't have enough history to really populate this indicator correctly around that time. And what do you know? Bitcoin coming down right now. Do I want to make any moves? Perhaps not. Oh man, all the fun stuff happens when I'm recording. All right, well, on to the show. Anyways, back on over here. You can see that coming into September, we have officially met this line on the accumulation distribution indicator chart. And again, back testing it right here. This has been very, very consistent throughout the full history of Bitcoin. So since we have seen this happen, it is, historically speaking, relevant to be looking for a low within the next 3 to 4 months, basically around this current area. So for example, you can see that in this iteration back in November 2018, did it get the actual low? It got pretty much the low. As you can see, the month after that, did trade slightly lower, but that's okay. Didn't really make any significantly closing lower lows. Same thing over here in 2015. Actually, this one, it did make the low on, and then still took, 1, 2, 3, 4, 5, 6 months before Bitcoin really started to get going to the upside. Same thing over here, another 3, 4 months before upside. And even on the Rona dump, about 1, 2, 3, I'd even argue 4 months before the upside really started to get a lot more interesting. So ultimately, even if Bitcoin has put in the low at these regions, we would expect some sideways price action from here. I do think that that would be the most, relatable thing, or the most reasonable thing to be looking for. Man, I'm really chomping at the bit to trade this right now. I'm so sorry, but I need to bring up this on my other screen because it is looking really, 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 really juicy right now. All right, sweet. So yes, other than that, I wanted to talk about the average correction that we have expected in the past from this indication. So the indication is when the accumulation distribution indicator turns red, as you can see right here, from that to the next macro low, we have observed that there's an average correction of about 61.34%. Now, if we were to draw that average correction from when this indicator started to get red, which was back here in May, that would, that put Bitcoin at about $15,500, which I do still think is kind of the area that I really be looking at if the current low falls out, especially going to be telegraphed in advance by breaking below about 20,500. But in this case, you can see that if we were to even take it from where Bitcoin, is currently bottomed out for now, that would be 56.16%. And we do expect some variance within this. And that's actually about the same correction that we did see, or crash, you could say, in 2018. So it's reasonable to say that, hey, we're in the ballpark. It's close enough in this case. Now, moving on to the next chart, as I bring back up my notes over here, I'm going to revisit another indicator that we've been looking at a lot over the years. And once again, it is the daily. Well, it's not that it doesn't really matter on the time frame, although the daily is the one that it only works on really. And it's the hash ribbons indicator. So basically, what is this indicator? Well, what you need to know about it before I go into like a lengthy explanation that probably doesn't really help all that much is this. When it prints a blue buy signal, the major low before that blue buy signature has been, I wouldn't say it's not a macro low, but like the major low before the next major move to the upside, essentially. Let me just throw on my drawing tools right here, and I think that will better explain this. So basically, anytime that we have seen the blue buy indication, the low before that has never been violated, except for 2 times in Bitcoin's history. One of the times was more recently, in fact, and that was below about, I think it was like 40,000 bucks over here months and months ago. But yes, we have gotten yet another blue buy signature, which was fired off on the 20th of August. So that would imply that the major low before that, which was basically about $17,500, likely doesn't get traded under, again, 2 out of, I believe it was 14 or 15 times. That has been the case. We've never seen lower than that. So fair enough. Again, keep in mind, the last one that we just saw over here obviously was very much violated below about 40,000 bucks. So about a year later. But to be fair, Bitcoin did rally onto new all-time highs before that. Anyways, in this case, I've also done a statistical analysis of it. This is irrelevant, or not necessarily that relevant towards what we're talking about, the average time. I'm talking about the time from when the indicator itself prints capitulation to the blue buy signal. By the way, this current iteration that we just saw resolved was 71 days. The average was 64. Yeah, about 64. The average move after the blue buy signal has been initiated was before the next correction. Oh, God damn it. Come on. Let me get on over here to this damn number. Okay, sorry about this. About 62%. So what am I talking about? Well, let me give you an example. The last example that we do have was from this one over here. We have the blue buy signal. There is the last major low before that signal. And of course, the next rally from that signal to the next major high before this correction was about 42.61%. So I've done that through all of them. The average was about 62%. If we were to add that on to the current, to our current, trajectory, that would put Bitcoin, somewhere around about 30,000 bucks, which I think is significant because if Bitcoin can pop back above that rejective $25,000 high, things really, for me, I actually would really start to entertain the possibilities and the high probability that Bitcoin does have a macro low. And I mean, that's pretty much my main criteria, actually, is popping back above these highs that we saw in August. Anyways, moving on to the next chart, we have the quarterly over here. Now, the quarterly closes at the end of this month. That is September, obviously. And there's something of particular interest here, which admittedly is not very well tested, but we can get into it nonetheless. And that is this, the quarterly RSI. The quarterly RSI is going to have a chance to make hidden bullish divergence of 3 drive variety, which is typically quite powerful. You'll notice that the first drive of bullish divergence, right and over here, or the second drive, I should say, was resolved in the 2018 saga, essentially marking off the macro low from there. And obviously the anchoring point was basically the macro low in 2015. So I'll put on my drawing tools right here, and you can essentially see, let me get rid of this, that's not relevant towards this chart, apologies. You can essentially see that, and let me get rid of this as well. You can essentially see that all of these lows are basically going to be put on potentially on the same trend line here, which yes, I think trend lines on indicators like this actually matter more than on price action, just personal opinion. But yeah, you could envision that 1, 2, 3 drives of hidden bullish divergence if Bitcoin confirms a local low here. How would you confirm a local low? Well, it's not going to happen all in the same dildo, obviously, but in the next 3 months coming into the end of this year, if you do see a move back above the high of our current one, that's going to be resolved at the end of this month, which is about 25,200, that same number that I just repeated earlier. Well, that would confirm it as as a local low, and I would be looking for moves back up somewhere actually very likely close to like at least 35, but probably closer to the shallow $40,000 territory would look relevant. Again, playing that out that hidden bullish evidence over here on a quarterly time frame, you know, the highest that we've really envisioned for right now. Moving on to the next thing, I do think that this is also of particular interest. If we go to the weekly does have one massive major falling pizza in play. In fact, now this falling pizza, I think other people have noticed as well. There's definitely been some commenters who I do want to give some credit to for calling this one out. But the thing is that it's far and away from being resolved. I think it was actually Mr. Blue who called this one out. It's still far and away from being resolved. But if we do see a break above the upper boundary, these type of formations on our side do actually have a pretty damn good hit rate from my experience, especially on a higher term time frame like this. And this one's very well defined here, but obviously it does have a lot further to go. I think a lot of people are looking at like a smaller one within this, and I don't think that's it because, you know, you wouldn't expect something like this. But the bigger one, yes, definitely, or I shouldn't say definitely, but extremely likely. And any sort of break back above that, I would be looking for a retest into the bullish control zone of the weekly RSI. We can't necessarily forecast the current price action from that, although Caretaker's RSI can tell us what price at this week would need to be recorded for that, which it's just not reasonable. You know, obviously it's going to change a lot, but it'd be 38,800. But kind of gives us a bit of a ballpark if that were to be resolved for what it's worth. Anyways, on top of that, you know, well, was there anything else here? No, I think that was it. We do have a phantom drive of regular bullish evidence over here and a bit of an inverted header and shoulders. I fucking hate that. I'm not even gonna mention this one, man. This just silliness right there. Silliness. Also not relevant to the macro scale. All right, sweet. So now let's get into some analysis of some, you know, tangentially related assets that I do think, you know, they have proven their relationship over on the macro, and that is something that we identified yesterday and the day prior, and that's going to be the weekly on Dixie, the dollar index essentially. And so the idea here is that we expect risk assets to kind of play opposite of Dixie, that being the dollar strength. It's kind of not a direct relationship, however, because Dixie is actually measured versus a basket of other fiat currencies. So essentially Dixie going up doesn't necessarily mean that like the absolute value of the dollar is going up. It's just relative to like all the other shitty currencies like the euro, which is very shitty right now because I can assure you because I live here. It's where euro pours. Anyways, Elsa thinks she thinks that's like so fucking funny. She's like, euro pours? You call, because like Americans for whatever reason call Europeans euro pours, in case you didn't know. It's because we have a couple things that you guys don't have. So I'll just let you know right now. First things first, we have ice that comes from our refrigerator. All right, you guys don't have that, so sucks. And second, we have ACs, which we actually have an AC here in Finland as well, but most people do not. So sorry, Europores. Anyways, I'm just kidding, okay? It's a bad attempt at humor, all right? Just fucking relax. I know that there's gonna be some comments like, fuck you, man. Seriously? You're gonna live in our country and call us Europores? Maybe. Anyways, Dixie over here, as I get back to the analysis, is putting in 3 drives of bearish evidence on the weekly time frame, also hitting some pretty significant monthly levels as well, you know, coming in back from this whole top being formed in actually the early 2000s. So yeah, you know, I do look at this as a nice pullback region. To play the other side, however, you know, this is an uptrend, obviously. So I would be looking for first and foremost higher lows on this pullback. But this pullback very likely does come back down somewhere around about $1.05.5. And if things really get crazy, maybe all the way down to about $1.02.5. So, you know, risk assets, do they catch a bit of a bid whilst that happens? Perhaps yes. So this one would obviously be invalidated if we see any sort of move above the current high. But for right now, you know, 1, 2, 3 drives, very likely coming down at least to about $1.05.5 in the coming, couple months, I'd imagine. Anyways, moving on to the next thing, I wanted to get back and revisit to this chart. This is going to be the monthly stochastic momentum oscillator chart for Bitcoin. Basically, anytime, or we've actually marked off, or Bitcoin has marked off all of its macro cycle lows with the monthly stochastic oscillator turning to the upside. Now, it does turn to the upside after the official low has been put in. And what it typically does measure is the momentous drive to new all-time highs that happens naturally after that. So you can just backtest it again yourself for right here. Let me get rid of this because it's just not helpful right now. But yeah, it's been pretty fucking good. So yes, moving on though, the reason why it's relevant right now is because the last few macro cycle lows from 2018 and also 2015 came in this distinct region here between these two horizontal bars. So green bars, I should add. And as you can see right now, we're within that same region for this month of September. Here's the thing though, in order to turn it up, which is, when things really start to get a lot more interesting, the number that would need to be closed above for this month of September would be 32,300, which I think is very unlikely. But naturally, as this month closes into October, this number will change significantly, just like it did last month and the month before that, and well, all the prior months, basically going back to like December of last year. And will potentially be more attainable. So if we see, somewhere at around 25,000 bucks coming into, let's say, October, that would be also a pretty good indication that maybe the macro low is in. So again, we've gone over a lot of things here. This is 15 minutes into it. I think these were probably the most relevant to the discussion that I wanted to bring up, or at least relevant to my interests, which hopefully is in some way helpful. Again, I want to reiterate, however, that this all falls apart as far as as far as a major or macro low with any sort of a daily closure, especially below 20,500. I'd be looking for a retest of our current lows and then lower lows after that. But for right now, as long as Bitcoin remains above these regions, that would be my sort of invalidation for these sort of ideas over the long term. And hopefully this was in some way helpful. So I'll be signing off right there. I forgot to show my Instagram. I've got Instagram, which I post a lot of trading and untrading related content, which there is a link in the description below. And then also Bybit has for the next few days their promotion going on, where basically if you deposit $1,000 in US dollars, then you get $1,000 in Ethereum contract position. There's a few other fine details with that. You can check that one out and get access to that in the comment section below. There's going to be a link there. It's not going to take you to the exact deal, but I can assure you it still awards you those privileges as I'm told. So sweet. Yeah, that's a good place to end. Much love, take care, and see you hopefully soon.